Welcome to today's What Moved the Market show. I'm your host Prem. It's Thursday, November 13, 2025, and here is everything you need to know as the markets close for today. Indian equities took a breather today as the markets ended nearly flat after 4 consecutive sessions of gains. The Nifty 50 closed practically unchanged, up just 3.35 points or 0.01% at 25,879. The Sensex mirrored this sentiment, closing barely positive with gains of 12.16 points or 0.01% at 84,478. Bank Nifty, however, showed a bit more resilience, gaining 126.65 points or 0.22% to finish at 58,391. The broader market had to navigate through volatility triggered by caution ahead of Bihar election results, but ended supported by easing inflation and growing optimism around a possible India-U.S. trade deal. The rupee held relatively steady against the dollar, closing at 88.6278, remaining under pressure but not hitting any fresh lows. This currency stability has provided some comfort to the market even as global uncertainties persist. Leading the gainers pack today, Asian Paints powered ahead with a stellar 3.77% jump to close at 2,874 rupees after delivering a fantastic result with consolidated net profit surging 46.8% year-on-year to more than 1,018 crore rupees in the September quarter. Right behind it, Hindalco Industries posted a solid 2.47% gain, benefiting from sustained strength in global copper prices, which have climbed to 16-month highs. ICICI Bank also showed resilience, gaining 1.95% amid steady buying in the financial services space. On the weaker side, Eternal bore the brunt with a significant 3.69% sell-off, setting the tone for a challenging day among certain heavyweights. Tata Motors commercial vehicles unit slipped 2.84% and Mahindra lost 1.46%. In the mid-cap space, there was pain too, with Cochin Shipyard plunging 4.63% after reporting a disappointing 43.08% year-on-year decline in consolidated net profit for the quarter. On the brighter mid-cap front, Ashok Leyland jumped 5.59% on decent fundamentals, while Prestige Estates projects and Tata Communications also contributed meaningfully to the upside momentum. From a technical standpoint, the Nifty 50 formed a doji candle near its 20-day exponential moving average, suggesting some indecision at current levels. The index continues to hold above its immediate support zone of 25,800 to 25,900, which remains critical for bulls. On the resistance front, the psychological level of 26,000 is key, and breaching this could open the door to test fresh lifetime highs near 26,250. Bank Nifty tested its channel highs and is now facing near-term resistance around 58,400 to 58,500, with stronger support positioned at 57,800 to 58,000. Sector performance painted a mixed picture today. Metals shined with a gain of 0.44%, riding the back of sustained strength in global commodity prices. Consumer durables and telecom also notched up gains of around 1% each, with defensive buying supporting these spaces ahead of the election verdict. However, IT stocks struggled to maintain momentum despite earlier gains in the week, with names like Infosys and TCS ending in the red, each declining by around 0.6% as profit booking kicked in. Realty and financial services showed volatility with selective action based on company-specific developments. On the macro front, inflation data showing signs of cooling continued to provide support, with market participants anticipating that the Reserve Bank of India could look at rate cuts sooner than previously thought. This expectation of lower interest rates domestically, coupled with the U.S. Federal Reserve's recent rate reductions, has bolstered sentiment around a potential India-U.S. trade deal, which remains the bigger focus for investors looking ahead. The Bihar election exit polls indicating a comfortable National Democratic Alliance victory also removed some political uncertainty, though actual results are awaited. From a regulatory perspective, SEBI's recent crackdown on unregistered trading call providers and the agency's enforcement actions have underscored the push toward maintaining market integrity and investor protection within India's advisory ecosystem. Commodity markets saw robust action today with precious metals leading the charge. MCX gold jumped 0.71%, closing at 127,359 rupees per 10 grams, marking strong gains as festive season demand and safe haven buying continued to support the yellow metal. Silver was equally impressive, surging 0.71% to settle at 163,248 rupees per 10 grams, extending its fourth consecutive session of gains, driven by both seasonal buying and robust industrial demand. MCX crude oil edged up 1.1% to 5,255 rupees per barrel, maintaining strength despite lingering concerns over global growth. Spot gold and silver prices also reflected this bullish momentum, with retail gold trading around 12,780 rupees per gram and silver reaching 172,000 rupees per kilogram, underscoring sustained investor appetite for precious metals in uncertain times. Geopolitically, ongoing tensions continue to simmer in the background, with discussions around Ukraine developments keeping traders cautious. However, markets have largely focused on the constructive progress being made in India-U.S. trade negotiations as the bigger catalyst for near-term direction. Global central bank commentary, particularly any further signals on rate cuts from the U.S. Federal Reserve, will remain crucial in shaping risk sentiment. Looking at tomorrow's technical setup, Nifty 50 is expected to maintain a range-bound approach between 25,800 and 25,950, with the psychological 26,000 level acting as intermediate resistance. Any consolidation near support zones would likely attract fresh buying, especially with metals continuing to provide a positive undertone. Bank Nifty similarly appears poised for a holding pattern above 58,000, with resistance around 58,500. The overall momentum suggests that traders should look to accumulate on dips near support levels, while maintaining discipline on position sizing given the lingering event risks from the Bihar verdict. India VIX remains stable near 12.5, indicating that implied volatility is not yet pricing in any major shocks, creating a favorable environment for premium selling strategies and range-bound trading setups. Sector rotation from IT into metals and pharma may continue to play out as investors hunt for value and better earnings visibility. Here's your actionable takeaway for tomorrow. With metals sustaining their bullish momentum and Asian paints having signaled strength in the consumption space, traders should consider nibbling at dips in metal and consumption-linked stocks around the support levels we discussed. If Nifty holds above 25,800 tomorrow, a run toward 26,000 becomes increasingly likely. For options traders, range-bound plays with iron condors around the 25,800 to 26,000 band could offer attractive risk-reward, especially with VIX remaining subdued. We'd love to hear from you about today's market action. Send in your questions, ideas, or topics you'd like us to cover on tomorrow's evening wrap. Thank you for tuning in, and remember to catch us bright and early for tomorrow morning's market update. Stay sharp out there, and we'll be back to break down every move in tomorrow's session. This is Prem signing off. Until tomorrow evening, happy trading.